Welcome to another episode. My name's Jose Najarro, and today we're going to take a quick look at past earnings and upcoming earnings for this week. So let's get started. All the information has been taken from Seeking Alpha, so I definitely recommend checking out the website. It's pretty nice website where you can find transcript and so much more information for free. The earning results I'm going to show are on non-GAAP basis. And the first company we're going to take a look at is Take-Two Interactive Software, TTWO. It is a gaming company. They did top expectations for bookings in Q2 and gave a substantial boost to its full year guidance for bookings and profits. Earnings per share were 27 cents and it beat by 23 cents. Revenue was 422 million and it beat by $65 million. That's a nice revenue surprise. And one good thing is this upcoming week, I'm working on video game companies. I'm going to take a look at EA, ATVI, which is announcing soon, TTWO, and I'm going to compare all three of them. So make sure to keep updated on those upcoming videos. I think EA should be posted either tonight or tomorrow night. The next company is Shake Shack, ticker SHAK. Earnings per share were 27 cents. It actually beat by 4 cents. Revenue was 152 million and it beat by 2.9, almost $3 million. Shake Shack's reports same sales increase by 3.6%. That's comparable sales. Always increasing is always great news in Q2 and topped the consensus estimate for a gain of 2.2%. Traffic growth was also up 1.3%, which seems good, right? So they are increasing comparable sales and they are increasing the traffic growth for their restaurants. Next, we have Caesar, CZR. This company is the casino business. Earnings per share were negative 47 cents, and it was a surprise by negative 40 cents. Revenue was 2.22 billion, and it was a beat by $14 million, so not by a lot. And we see that it did miss on earnings per share. It did, though, post a 5% revenue growth in Q2, but there is competitive pressure in Atlantic City, and some Midwest property weakness acted as a drag on growth. Next, we have Marriott International's MAR. It's slightly lower after the hotel company guides for full year fee revenue of 3.82 to 3.85 billion versus the 3.85 to 3.93 prior view. So you can see they did lower their guidance for the year by a nice $0.03 billion. Earnings per share were $1.56 and it met expectations. Revenue was 5.3 billion and it surprised beat by negative $200 million. Some of these companies are companies I follow and that I want to take a look at. And some of these are companies that I never knew were companies. So car gurus, I use their website all the time just to take a look at cars around my area. And I didn't know they were a public company, so I wanted to see what the company is doing. So ticker CARG, revenue of 145 million and is up 31% year to year revenue. So it had earnings per share of 10 cents and it beat by 3 cents. Like I mentioned, revenue was $145 million and the surprise beat by $4.36 million. So next we have Avis, the rental company ticker CAR. Looking ahead, Avis sees a full year revenue of about 9.2 to 9.5 billion compared to the consensus of $9.23 billion. So we can see they are around that consensus estimate point, which is really good. They're almost at the low, their low range is almost the consensus point. So that's really good. Earnings per share of $3.35 to $4.20 compared to consensus of $4.09. So that's pretty good. Again, it is within range, so it seems like this company is moving in the right direction. Earnings per share were 79 cents and it beat by 5 cents. Revenue was $2.34 billion and it missed by $9.2 million. That pretty much is flat. It's not, in my opinion, it wouldn't really be considered a miss. This company met its expectations with the analysis. Next, we're going to take a look at another rental company, Hertz Global Holding, HTZ. Company tops estimates on both lines of its Q2 report. Revenue was up 5.1% to $2.51 billion as U.S. traction days increased 6%. Earnings per share were 74 cents. It was a surprise beat by 24 cents. That's actually a really good number. Revenue was 2.51 billion and it beat by $38.28 million. Next, we have Tyson, the big food company. You see them always in any supermarket you go to. You'll find this brand. So they do say that new product innovation helped volume growth in core retail lines outpace other large food companies during quarter two. Although results in the chicken segments were mixed and the pork segments was negatively affected by increase in hog costs. I did not know there was an increase in hog costs, but now, thanks to this information, I do know that pork is a little more expensive, and something I won't really take a look at, but it's pretty cool to know. Earnings per share were $1.47. Earnings per share surprise was flat. They met expectations. Revenue was 10.88 billion. This is a big company. They're making a lot of revenue, and revenue surprised by missed by $70 million. And finally, we have Disney. This is also a company I really want to do. I think after the whole video game segment videos are done, I'm gonna take a look at Disney. They have earnings per share of $1.35, which missed by 39 cents. Revenue was $20.25 billion and it missed by $1.16 billion. So this company definitely missed on everything. But I have to take a look at why. I was looking at through some of the quick articles, and they did mention that their cost to start up their streaming was a lot more expensive than actually anticipated. So I want to take a look if these were all one-time costs or if it's something that's going to reoccur over time. So I definitely can't wait to do an episode on Disney. One of the major things I saw was free cash flow went to negative 2.93 billion, almost $3 billion of negative cash flow compared to a positive 2.46 billion a year ago. So that's definitely a huge shift in free cash flow. But like I said, I want to check if these were all due to some one-time expenses based on them ramping up to make sure that their streaming service coming up this next quarter actually is on par. So now we're going to take a look at upcoming earnings. So upcoming earnings for today, Wednesday, we have CVS in the morning, and then after hours we have Roku. We have Stamps. Stamps I don't normally take a look at, but I remember the past few ones, they have fallen big. So I know a lot of people are probably wondering when that is. We have Lyft on Wednesday, and we have Booking Holdings as well on Wednesday after hours. For me, the big day happens on Thursday, though. Thursday, we have KHC, Kraft Heinz, which is one of the major food companies that has taken a huge hit. We have AMC Entertainment Thursday early morning. And this is a company I did do a video on previously, so definitely go check it out so you guys can see what the difference is compared to last quarter and this quarter. We have Trade Desk after hours. Activision, like I said, I can't wait for this video segment, a video game segment. Activision after hour, Uber after hours, Dropbox, Overstock, Funko, and Turtle Beach. All these companies are companies I would enjoy taking a look at, and most of these are happening Thursdays. There doesn't seem to be happening anything Fridays. Monday and Friday are usually slow days, and we are coming close to that. Close to earning season being over. I think we only have like maybe 2 more weeks, and these 2 weeks are going to be pretty slow for the rest of the companies. So that's it, guys, for me. I hope you guys enjoyed the video. I can't wait. Make sure to subscribe. I can't wait to post those videos on the video game segment. I'm pretty excited to do a comparison on all three. But like always, at first, I'm going to start off with doing individual videos for each, talking about what the company has to offer. So you, as an individual investor of each company, can really understand what's happening with the company. And then after all, I'm going to take the best of all three and the worst of all three and do another video explaining which to me would probably be my favorite, if any, to invest in. So make sure to subscribe, guys. Post a comment. Let me know what company you guys want me to take a look at. Take care, guys. Have a good night, and see you tomorrow.